housekeeper.com. I thought I'd talk to you about a minute or two what's going on. But we're probably going to have a strike in the next September 14th when the motor workers go on strike. We have one strike converted with FedEx and UPS. Subscribe. That's why this is the time, and the Feds are probably going to raise the interest rate one more time. And even if the Feds don't raise the interest rate, say for example, you start 18 months ago, your interest rate was 15%. Now it's 20%. So you were paying, like, say you had a $10,000 balance, you're paying $1,500 for that balance. Now looking around, just like, look at this, is like different. The trees as loans, and the short grass is what your loan was before. The big weed is what now. Now you go to your loan, it's that same 10,000 loan balance, you're paying 20%. Now you're paying $2,000 a year on that balance, which is $500 more, which is almost $40 a month. So say you had $300 saved up to cover all your bills before the interest rate went up. Now you're paying all that money now you're paying an extra $40 that comes out of your bank account, which comes out of the money you were using for something else. And that's what we call price inflation. Price inflation is when prices go up, the money you saved or had budgeted for other things go down because you have to redirect it. So now you're going from a savings to say $300, and you didn't have any extra money to get that $40 a month to pay the bill, so you take it from your emergency money. Now your emergency fund goes down from $300 to $260. See the difference? That's why right now, while the Fed is taking a pause, this is the time to use those 3 strategies. Go to my website. I already gave you one of the strategies where I told you figure out the loan balance. And then go there to tooldtobebroke.com. Let me explain you how about paying a basic minimum payment helps you get your loan down. So subscribe. And then we have programs. I have programs from $35 all the way up to $350 to help you with your loan, with these loans, because the Feds probably raised the interest rate again. When that strike's over, that's going to increase the prices, which the Feds are going to try to slow the market down, which means they'll raise the interest rate. So now you've already gone from 15% to 20%, which is extra $500. They may raise it another half point or another 0.25%. So now you're paying an extra $560 on that $10,000 loan without buying any products, without going to the strip bar or anything. So subscribe. Let me show you how the power of interest can either work for you or against you. Learn how to make that minimum payment to pay your loan faster. Email me or go to tooldtobebroke.com and get some tips on how to pay that loan faster. Later.